Morning. So while US markets paused during Thanksgiving, the rest of the world set up for a cautious end of the week. So there's been progress in vaccine trials, and that has enthused most of the investors, but the impact of coronavirus cases, which are still rising, along with uncertainty in regards to economic policies, generated some risk of move. So equities in Asia and Europe retreated slightly yesterday, and they're set to continue in early morning today. Following an OPEC meeting, oil retreated about 2%. That's pretty much the only move that is worth noting. Gold is staying flat at 1,810 as it has for the past few days. So traditional markets have been muted. The crypto space, on the other hand, was gripped by a significant bout of volatility. I don't say massive though. For anybody who's been in the space for a while, a 14% intraday low on Bitcoin is not unexpected, and similarly, a varying degree of a 20% retracement in the different altcoins is not something weird with those kinds of volatile assets. So what's been triggering the move? The dynamic mentioned earlier in earlier briefings about miners not selling their coins still holds, so they're not the source of the selling pressure. A more likely explanation, and a more obvious one, is that as we approach the 20k mark but fail to reach it, impatient, another word is greedy or fearful, impatient traders would take profit. And you've seen large whale transfers towards exchange, which is typically hinting at people taking profits, right? Transferring their coins to sell into fiat. So I think that is the obvious explanation. Of course, it might have been triggered by that tweet by Brian Armstrong mentioning that US regulators were looking to regulate private wallets, which spooks a lot of the investors which are very focused on privacy and that decentralized function. Another thing to keep in mind, though, that extended rally for 2 months has been supported by a lot of leveraged longs. And of course, that's great when everything goes well, but that swings the other way in a pretty nefarious way when things do retrace. And so there was about 1 billion or 1.3 billion of liquidations yesterday across all exchanges. And those are just derivatives trades that are being liquidated as things retreat. Lastly, what now, basically? What's the perspective? Personally, as a long-term holder, I actually love pullbacks. I think they're a great way to allocate some more, and I think a lot of the investors feel the same way, which is they want to get in at a better price, even if they're trading short-term. That being said, we have an engulfing pattern, so we have a candle that engulfs about 7 to 10 days of trading, depending on how you want to look at it. And that's spooking a lot of the investors' confidence, especially, again, as we haven't reached that 20k mark yet, I want to say. So it'll be really interesting to see if we keep on retracing further for a bit, which again, personally, I think would be a great way to allocate some more, not financial advice, just what I'm doing, or if we just jump right up to 20k after that small retracement. That's all for me, a really interesting space to watch. I wish you a great day, a great weekend, and of course a great trading.